Okay, good afternoon. Good afternoon, everybody. Welcome to VTP Stage 2 Online Technical Tuesday Coaching Call 176 for the 6th of January 2026. I hope you're all well. I hope you've had a good break over the festive period, and I hope you're ready for another eventful year in markets, ladies and gentlemen. That's what we've got coming down the pipe. Great to have you here. Okay, we'll be running the stage two calls throughout the year. I'll be trying to break up bits of it and put it into the sort of socials and the FX Trader Paul, Forex Trader Paul YouTube page as well. So if you can't catch all of the sessions, you can only catch little bits of it there or watch the recordings. Great to be here. Great to be back. Okay, I'm easing myself back into it as well. Okay, so doing these as part of actually also spooling myself back up to pace after a break as well. So we'll see how we get on. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. And if you want some help to make 2026 your best trading year, the VTP Trader Accountability Group, okay, that starts again this week. Our first live session is this evening, okay. If you can't make this evening, the sessions are recorded and you can watch and join. And that is a weekly call, part of a small group that basically just variably providing discipline, accountability, and consistency in your trading. If you want to be around better traders and help you develop, then it's the group to join. And you can ping me if you want, or there's a bit.ly code or a QR code there that you can utilize. Okay, so let's bring up our charts. Where are we? Bang, here we are. Dollar holler. All right, let's have a look here as always. We'll start with the dollar. So I've got Aussie on the weekly, Kiwi on the weekly, Euro on the daily. We'll do that. Dollar CAD on the weekly, cable, dollar yen, and dollar Swissy. All right. So and then of course dollar index in the corner. All right. So let's just put them all up there so we can see that. But as always, let us start with the dollar index. Okay. So this is the monthly chart, all right. So remember from last year, if you look at last year again, we kind of had a pin bar up into this big order block here, and then really just we had a kind of debasement there. It looked like this was kind of all that time of the Trump tariffs. We're going to rally up, but actually, if we look at that, we just really mostly spent most of last year in that block there, didn't we? Underneath 100, between about what's that? Between about 96 and 100. So kind of that sort of that area there. Okay, that sort of 4,400 pips area there, and that's where we've batted about. What I'm intrigued in is when I look at the monthly. And I look at that to me that's actually an evening start, and that's a monthly evening start, and we close beneath the lows. Yep, we've had a little bit of a start with dollar, which we'll look at in a moment, but my natural assumption would be that we could not get back up above 100 here, and invariably, I wonder if we're going to go back down to these monthly close lows there around about what's that, about 96. That would be today. That would be my kind of view. Remember that we're looking at probably at least 2 interest rate cuts, perhaps 3, out of the Federal Reserve. That will weaken the dollar itself. So today, that would be my view. And of course, that could all get ripped up tomorrow if something happens. Right? Welcome to trading, but you have to sort of work with what you've got. And that's what we're looking at there. And when I start to go down here, let's go through the gears. Weekly chart, that weekly chart, others would say, well, actually, Paul, you've actually got a bit of a sort of inverse head and shoulders building there, and the kind of head is actually a double bottom, which is a reversal thing. And and we've talked about that at the time. That was the first Fed Reserve cut, and then we kind of rallied up to it. Couldn't get, as I said, couldn't hold above 100, and we've kind of drifted our way down there now. That's the end of the year. Okay, that's always going to be a little bit shoddy, all right. But what we saw as we moved into it was that we kind of had a little bit of a pop yesterday, all right. But even that didn't have much strength in it, all right. So the daily chart, we've kind of weirdly gone. Here we go on the daily chart. We've kind of gone from a double top there all the way down to a double bottom there, okay, and then we popped through the neckline. Excuse my drawing, but you get the gist. And we couldn't get up above that kind of that level of resistance there. We literally tapped it and then dropped ourselves our way down there. as I said, I think it's going to be a bit of a mixed week. All right, let's go to the 4 hour chart. Yeah, so the 4 hour chart, you know, kind of bit of broken last week, but we broke above, gapped up, pushed up, hit that level, and then just dropped. And now we've hit the 50 and pushed up there. Today we haven't got any really major US data, but of course there is going to be all the sort of background coming out about the about Venezuela, about what's going on there. Okay, we also, as I said, we're into the first week or so with all that jobs data. That's going to give us people insight into the healthy economy, and then as I said, naturally, you're just going to get people at the start of this year starting to sort of look and make their kind of decisions on where they want to go and where they want to do, etc. So, you know, for me, I'd be looking at that here. Just, I'd probably be looking at that at the moment as well. Actually, that is bearish. It is beneath those averages. It is, for the most part in that downtrend. As I said, if that is a monthly evening star formation, I'd be looking at down towards about 96, and I'd be sort of looking, well, is that going to give us sort of kind of dollar weakness down to 96? Is that where we can look to go? Because of course, if we have that, well, then invariably you're looking at, well, how does that impact the other markets? The first one people would look at of course is euro dollar. If we look at that, I mean, you know, euro dollar, I would look at that as, once again, we were in a bit of a range, almost, maybe a bit of an ascending triangle building, okay, with that false breakout there. And some would say, well, actually, Paul, is that not a monthly morning star building there? Okay, in which case, you might say, well, Paul, could it pop to 120? If it did, I think that would be on real dollar weakness more so than any euro strength. Certainly, when I go down to the weekly chart, yep, we're above the averages on the weekly chart, but part of me also sort of sees that at this moment as a little bit of a weekly head and shoulders, all right? So for that, I wonder whether we drift to 115, which would mean euro weakness even at a time of the dollar strength. So as I said, these next couple of weeks, we'll start to get a bit of clarity on that. But just looking at that here today, based upon what I'm seeing, I'm looking to see, are we going to drift our way down there? Are we going to see that kind of euro weakness? Go to the daily chart, and not let me just clear this, not massively dissimilar to, it's the inverse of what we saw with the dollar index. We went from having a double bottom all the way up to having a double top, okay? And now we're drifting our way down. So, let me just draw this a little bit better. Sorry, I appreciate my artistry skills are not always great, but then you're not here for an art class, are you? So I would be looking at that saying, well, there'll be some people saying, well, actually, Paul, isn't that just a bull flag in an uptrend? And I could give you that. I could see that. I would be wanting to break above that and the 20 and get above it to be bullish there. I wonder whether, see how the way the kind of 50 is pointing up, the 20 is rolling over, whether we're just going to get a little bit of a squeeze, and maybe we get a squeeze in for the next couple of days in front of that kind of jobs data at the end of this week. Maybe that's what we're waiting on. There's no real major formal European news, okay, this week. So maybe it's the kind of dollar that's going to run that, and maybe we're just squeezing up in front of that. As I said, we're going to look. I think we'll look at Swiss and cable anyway, and we're going to look at yen. I think. All right. So, but certainly, there's not a shock that Aussie continues to be strong against the dollar. And last month we kind of, we're just sort of by the skin of the teeth closed above the 50. And if you look at that, the last time we closed above that was May 22. Okay, so that is, it's not insignificant. All right, it's not insignificant. And even when we've had big reversal, big reversal here, but the 50 stopped it. We came up here again into the region of the 50. And then, we printed that earlier this year, and we've just worked our way up there. And that is a case of that Aussie strength is there. Okay, that's a big monthly, sort of move, isn't it? That's that's what I'll be looking at. That remains that Aussie strength. And on the weekly, we did pivot off the weekly 200, but then flipped it. That's us flipping it there. Okay. And now, yeah, we're above the averages. Okay, the 8, the 20, the 50, they're all starting to point their way up. So at the moment, that's that case of Aussie strength going on there.